Welcome to our first audit walkthrough video. I'm Logan, and in today's video, we're going to be going over Audit Area 1, and this is Section A1. This is an application topic, and the topic is Apply the Conceptual Framework for Members in Public Practice and Members in Business included in the AICPA Code of Professional Conduct to situations that could present threats to compliance with the rules included in the code. And we're going to be doing that the SuperfastCPA way, which is diving straight into the questions to learn the material. If you don't know much about our strategies, and if this is the first time you're seeing something from us, make sure you go to SuperfastCPA.com and sign up for our free 1-hour training webinar where we go over the key ingredients to passing the CPA exam. Again, it's only 1 hour, it is free, and we will show you how to pass the CPA exam without wasting months or even years of your time in just 1 hour. And after that, I'm sure you're going to want to learn more, so make sure you also check out becoming a SuperfastCPA Pro member. SuperfastCPA Pro members get access to the Pro course, where Nate explains in depth exactly what you should be doing every single day to pass the CPA exams, so it's kind of an expansion on the 1-hour training webinar. And SuperfastCPA Pro members get access to the full 10-question versions of these 5-question YouTube videos. So if you like this 5-question video or the other ones that we've made, make sure you check out becoming a Pro member, because Pro members, again, get access to the full 10-question versions of these videos so that they can get a bit more practice and a bit more understanding. So with all that said, let's dive straight into our first audit video. All right, here we are at question 1, and let's just dive straight in. Which of the following is a rule that members of the AICPA must comply with? So A would be members are prohibited from using false or misleading advertising. B, members are prohibited from ever receiving commissions for recommending products or services. C, members must disclose all confidential client information to any third party who requests it. And D, members may only charge contingent fees for tax return preparation. So if you've never seen this before, you may not really know what's going on and you may not know what we're supposed to answer. But the thing that you'll learn by doing the questions first is you'll see what you're supposed to be knowing from a question, and you'll learn how to pick apart questions, especially with audit, because audit is so conceptual. You have to learn how to read the question and how to pick apart which of them is obviously wrong and which of them could be right. So if you have an idea of what this is, that's great. If not, maybe pause the video and think through this, or we're going to go straight to the answer to learn which of these is a rule that they do have to follow. All right, the answer is A, members are prohibited from using false or misleading advertising. So that is a rule that members of the AICPA must comply with. So let's read through this. Members of the AICPA must not use false or misleading advertising. I mean, that makes sense. This rule ensures the public is not deceived by inaccurate claims about a CPA's abilities or services. So that's pretty clear. I mean, if you saw that on the exam, it'd be pretty easy to pick out what's true and what's not, because of course they can't be false or misleading because they're CPAs. When it comes to commissions, so that would be option B, CPAs are generally allowed to receive commissions for recommending services or products. However, there are restrictions. A member in public practice is prohibited from receiving a commission if they perform services that require independence, and we're going to talk about independence in the next video, and that would be things like audits, reviews, or certain attest services for the same client. For other services, commissions are permitted but must be disclosed to the client. And then as far as confidential client information, that's option C. Confidential client information must remain private unless required by law, such as in a subpoena. CPAs cannot disclose such information without the client's specific consent or legal obligation. And then finally, contingent fees, which we're going to talk about a little bit more later in the video, and that was option D, are generally prohibited for many services, including audits and reviews. So out of all these, the only one that was for sure a rule is that CPAs they can't have false or misleading advertising. The other three, they were too strict. B, they're saying that they can never receive commissions. That's not true. Saying that members can disclose confidential client information to anybody that requests it. Of course, that's not true. By the way, something that I want to point out with audit, frequently there are 1 or 2 options that are just too extreme. They make it so that it sounds like you can never do this and you can never do that. But in accounting, a lot of things are kind of subjective. There's a typical rule, but then there's a lot of times an exception to the rule. So again, if you see an answer or an option that is kind of extreme, saying that all or nothing, never ever, those are the kinds of things that typically point to an incorrect answer. Maybe not always, but a lot of the time. So we learned a lot from just reading the explanation. We learned which one of them was correct, but then we did learn what would be the correct version of each of the options as well. So we learned a lot in just one question. Now let's go to the next question. All right, here we are at question 2. Which of the following is not considered an act discreditable under the AICPA Code of Professional Conduct? So which one of these is not that? So let's read through this. Refusing to return client-provided records upon request unless the client pays outstanding fees. Failing to complete an agreed-upon engagement due to the client's inability to provide requested information. selling or distributing AICPA exam questions without authorization, or withholding CPA prepared work product to coerce payment from the client. So out of all those, which of them is not an act discreditable? Honestly, based off of kind of just deducing the correct answer, you probably could get the right answer even without knowing much about this. But if not, that's okay. If you want, go ahead and pause the video to try to think through this. If not, let's go ahead and look at the answer together. All right, here we are. The answer is B. Failing to complete an agreed upon engagement due to the client's inability to provide requested information is not an act discreditable. All the other three are acts discreditable. So this question is going to teach us a lot about those. Failing to complete an engagement due to the client's inability to provide necessary information is not an act discreditable as long as the CPA has made reasonable efforts to obtain the required information and appropriately communicates the issue to the client. So, if you're trying to get the information and you just never get it from the client and so you can't complete the engagement, that is not an act discreditable, as long as you were doing your best. Now, the other three are acts discreditable, so let's talk about them. You can learn a lot from the explanations, so always read all of the different explanations, all of the different options. And as time goes on, you'll be able to pick out what's important and what's not important, and you'll get faster and better at it. Option A is wrong because refusing to return client-provided records upon request is an act discreditable, even if the client has unpaid fees. CPAs must return client-provided records upon request to ensure clients can access their own information. So no matter what, CPAs have to return client-provided information back to them no matter what. Even if they have unpaid fees, or even if they don't like them, or whatever the case is, they have to return it. Option C, that was also an act discreditable. Selling or distributing AICPA exam questions without authorization is a clear violation of the AICPA Code of Professional Conduct and is considered an act discreditable. So, of course, you can't sell or give away for free AICPA exam questions unless you are authorized to do so. And then option D, withholding CPA prepared work product, such as financial statements or tax returns, to coerce payment from a client is discreditable. However, CPAs are not obligated to provide their work product unless required by law or agreement, provided their actions are not coercive. So as long as you are not withholding your work papers as kind of leverage, kind of to make sure that you get payment or making the client do whatever you want, as long as you're not doing that, you don't have to give work papers. So there is a difference that we need to talk about right there. Pay attention to the distinction between returning client-provided records and CPA-prepared work product. They are not the same thing. So client-provided records, you have to return those. CPA prepared product, you do not have to give those, and you're not going to be in trouble for that as long as you're not doing it out of coercion. So those are some more rules that we learned there. Now let's go to the next question. All right, here we are at question 3. Under what circumstances is it permissible for a CPA to depart from generally accepted accounting principles, or GAAP, when preparing financial statements? So when can a CPA depart from GAAP? Now, you may have heard this before. This is something that I think a lot of people have heard, whether through college or whatever the case is. So maybe in this case, pause the video, read through these different options, and when you're ready, come back. We'll look at the answer together to see if you got it right and to learn from the explanation. All right, here we are. The answer is A, when following GAAP would result in misleading financial statements due to unusual circumstances. So, again, I think this is probably what a lot of people have heard, and also it seems pretty logical, so let's walk through it. A CPA may depart from GAAP only if adherence to GAAP would result in misleading financial statements and there are unusual circumstances justifying the departure. The CPA must adequately disclose the nature of the departure, the reasons for it, and its financial impact in the financial statements or accompanying notes. So you can depart from GAAP rarely if it was a strange circumstance, a weird situation where if they had followed GAAP, it would result in misleading financial statements. Option B isn't right. A client's preference or alignment with industry norms does not justify a departure from GAAP unless the result would otherwise be misleading. Option C was wrong because anticipation of future GAAP changes does not permit a current departure. CPAs must comply with existing standards. So even if you know that section of GAAP is changing or whatever the case may be, you have to follow what exists currently until it is finally changed. So you can't do it preemptively. And then option D, the level of assurance, such as for a compilation, does not affect the requirement to follow GAAP unless explicitly agreed otherwise under an applicable framework such as ACBOA. And we're not talking about ACBOA in this video, so don't worry about that. But again, as the level of assurance has nothing to do with whether you have to follow GAAP or not. So that wasn't the correct answer either. So again, you can only go away from GAAP if it would lead to misleading financial statements by following GAAP. All right, let's go to the next question. All right, here we are at question 4. Under the AICPA Code of Professional Conduct, which of the following describes when a CPA is prohibited from accepting a contingent fee? So would it be when a CPA prepares an amended tax return claiming a refund based on new information? Would it be when the CPA performs an audit or review of a client's financial statements? Would it be when a CPA provides consulting services related to a legal proceeding, or would it be when the CPA performs a compilation engagement and discloses their lack of independence? Out of all these situations, which of the following, again, is when they are prohibited from accepting a contingent fee? So with all that, if you have any idea how this works, that's great. Pause the video and figure this out on your own. But if not, we're going to look at the answer. Again, we're using these questions to learn how to do the material. So let's go ahead and go to the answer. All right, here we are. The answer is B, when the CPA performs an audit or review of a client's financial statement. So that's when you cannot accept a contingent fee. So let's walk through this. CPAs are prohibited from accepting contingent fees for services requiring independence, such as audits, reviews, or certain other attest services. Independence is a fundamental requirement for these engagements, and contingent fee arrangements would impair it. And again, we're going to talk a bit more about independence in the next video, but you cannot accept a contingent fee if you are doing an audit or a review or an attest service engagement, because you have to be independent. And if you have a contingent fee, basically contingent fees are getting money for a specific outcome. And with an audit or a review or whatever the case is with those, you can't get a specific outcome just by choosing it. Otherwise, that would, of course, be unethical. So a contingent fee could lead to unethical behavior. So that's why you can't have it in those situations. But the other ones, you can have a contingent fee. So let's talk about those. Option A is where a CPA may accept a contingent fee for preparing an amended tax return claiming a refund as it relates to a legal proceeding or ruling and does not impair independence. Option C relates to consulting services. Consulting services related to a legal proceeding or ruling allow for contingent fees, provided the arrangement complies with ethical and legal requirements. And then for option D, for compilations, contingent fees are permitted if the CPA discloses their lack of independence in the report. And of course, this is the first video where we haven't talked about compilations or audits or reviews or attest service engagement. We haven't really talked about those things. All you need to know is that they are prohibited from taking a contingent fee for audits, reviews, and other attest services, but you can have a contingent fee when it comes to things like legal proceedings or even compilations, but you do have to disclose your lack of independence in those situations. So that was another rule that we learned about contingent fees. Let's go to the next question. All right, here we are at question 5. Which of the following would not constitute performing with due care under the AICPA Code of Professional Conduct? So there's due care, and which one of these is not performing with due care? So A would be maintaining professional competence and keeping skills current through continuing education. B would be exercising sound judgment and diligence in the performance of professional services. C would be ensuring compliance with applicable standards and legal requirements in every engagement. And D would be accepting an engagement outside of the CPA's expertise without consulting or collaborating with experts. One thing I will say, I think you probably already know the answer just from me reading those. That happens a lot in audit, if I'm being honest. Frequently, there's one or two answers that are just completely nonsensical and make no sense. They're obviously wrong. And then there's usually one or two answers that are obviously correct, but the trick is learning the information well enough to pick out those nuances, pick out those differences. So that's why you have to practice the questions with all the exams, and that helps a lot with audit because then you can distinguish between those differences. If you don't already know the answer, then let's go ahead and look at the answer together and we will talk about it some more. All right, here we are. The answer is D, accepting an engagement outside the CPA's expertise without consulting or collaborating with experts. That's obviously the wrong answer. That's obviously not due care. So let's talk about this. Performing with due care requires CPAs to exercise competence, diligence, and sound professional judgment in all engagements. This includes recognizing the limits of one's expertise and seeking consultation or collaboration when necessary to provide high-quality service. Accepting an engagement outside one's expertise without seeking expert assistance violates the principle of due care, as it jeopardizes the quality and reliability of the services provided. That obviously makes sense. If you're not qualified to do the thing that you're being asked to do, you shouldn't accept the engagement. You should either ask for help and get an expert to help you, or again, not accept the engagement. So obviously that was the incorrect answer. But the other answers, this is something you also want to pay attention to, are related to due care. So let's talk about them. Option A, maintaining professional competence is a key element of due care, ensuring that CPAs remain knowledgeable and capable of meeting professional standards. Option B, exercising sound judgment and diligence is central to performing with due care, ensuring that services are carried out responsibly and thoughtfully. And then finally, option C, compliance with applicable standards and legal requirements reflects a commitment to professional and ethical responsibilities, a fundamental part of due care. So due care basically is being ethical, being diligent, being competent to do your job. And of course, the reverse of those things would be not performing with due care. So we've gone over 5 questions. We've learned a lot about a whole bunch of different little rules when it comes to the AICPA Code of Professional Conduct. Before we go any further, let's do one more part of the SuperfastCPA process called pillar topics. Now, the idea behind pillar topics is as you're going through the questions to learn the material, you will notice the key concepts that keep popping up throughout the questions. You've seen 2, 3, 4 questions trying to teach you about a certain thing, such as multiple questions teaching you about due care, or multiple questions teaching you about whether you have to return client info or not. Whatever the case may be, those are the things that pop up frequently throughout your review course. So you take a moment during and especially after doing the questions each day, and you write out these pillar topics in your own words so that you know what is most important for the exam. And as you do this each day, you're building your own personal repository of what you need to know for the exam. So let's go ahead and look at the pillar topics for this video. All right, here we are at the pillar topics. Let's just go through each of them. First off, for commissions, CPAs cannot receive commissions for services requiring independence, such as audits and reviews. For other services, commissions are allowed but must be disclosed to the client. There's returning client information. CPAs must promptly return client-provided records upon request, regardless of payment status. CPA-prepared work product may be withheld unless required by law or agreement. Then there's departing from GAAP. A CPA may depart from GAAP if following it would result in misleading financial statements due to unusual circumstances, provided the departure and its impact are disclosed. And then there's contingent fees. CPAs are prohibited from accepting contingent fees for services requiring independence, but may accept them for legal proceedings, tax services, and compilations with proper disclosure. And then finally, we talked about due care just barely. Performing with due care requires CPAs to act with competence, diligence, and professional skepticism, ensuring all work adheres to professional standards and is thoroughly documented. So again, those are a whole bunch of different rules and some of their applications when it comes to the AICPA Code of Professional Conduct. We're going to talk a little bit more about independence in the next video. In fact, we're going to talk a lot more about independence in the next video. And we might even talk about commissions and contingent fees again, potentially, because again, those have to do with independence. But overall, we went over 5 questions and we went over the pillar topics, and that is the end of this YouTube version of the video. Remember that SuperfastCPA Pro members get access to the full 10-question video, which I'm going to continue recording after I finish this YouTube recording. So if you liked this and you like our other videos for the other exams, make sure you check out becoming a SuperfastCPA Pro member, because again, they get access to the Pro course and these 10-question versions of the videos. And the easiest way to get into learning about the Pro course is actually first by going to SuperfastCPA.com and signing up for our free 1-hour webinar training, because you'll learn a lot in just that 1 hour, and it will give you a better path for figuring out how to buy the Pro course and so on. So make sure you check all of that out. I hope this video was helpful. If you liked it, make sure to like it and leave a comment, and I will see you in the next video.